Carbon reporting is a really important part of company strategies to reduce emissions and become more sustainable, because it provides greater visibility to internal teams to help guide them as to where to focus their efforts, and it also provides visibility to external stakeholders, to whom sustainability is an increasingly important consideration. But a lot of telcos today are still tracking their emissions in a very manual way. That means they're having to source relevant data by sending emails and setting up meetings with people. They're then having to clean that data and then manually enter it into Excel spreadsheets. And it's such a large task that it can even end up being a full-time task or a full-time job for an employee. And so that is where dashboards come in. A carbon reporting dashboard automates that process of tracking and calculating emissions using a combination of company data like travel reports or business purchases, manual data sources such as employee questionnaires, and also standard data sets like emissions factors. And the benefits of using a dashboard over relying on a manual process include greater automation, which provides a huge time-saving benefit and reduces human error, the ability to automatically output audit quality reports, and more granular and real-time insights into a telco's emissions, particularly their Scope 3 emissions. Now, there's a lot of great sustainability reporting offerings on the market today, but a lot of them have very similar messaging and claims, so it can be hard to figure out which claims are legitimate and ultimately which reporting dashboard is the most suited to a company's needs. But there are a few key things that you definitely want to think about when considering these different solutions. So firstly, it's good to get a solution that complies with industry bodies, either by following the methodology like the Greenhouse Gas Protocol method for calculating emissions, or by producing audit-ready reports that comply with industry standards. It's also important to think about how the solution calculates Scope 3 emissions. So most dashboards rely on a combination of two methods to calculate emissions, the transaction-based method and the activity-based method, and these methods differ in terms of the quantity and the granularity of the input data that's required. So for companies that are earlier in their process of carbon accounting, a methodology that's heavily transaction-based may be a better starting point, because that's going to be simpler and cheaper for them. Whereas companies that are more advanced in their journey and want more accurate calculations, with more input data, more specific emissions factors, and a heavier emphasis on the activity method. Finally, you want to start thinking beyond pure reporting of carbon emissions. So you want to consider whether the dashboard just reports on emissions, or if it's also going to provide recommendations on how to reduce emissions by identifying hotspots and suggesting the most effective action to take to reduce these. And then you also want to think about whether the dashboard only considers carbon emissions, or if it's going to support your company's wider ESG efforts, for example around the circular economy or workforce diversity.